Good evening. It's Vijay here. Welcome to a special episode of the year-end commentary of 2024-25. The financial year end has happened, and it has been one of the most tumultuous years in the recent past because the first half of the year, the bulls reigned till around September, and then the bears came into prominence. So when the bulls reigned, they really took it to higher and higher highs. In fact, the elections did not bother them. The Japanese carry trade collapse in August did not bother them. Then various other times when the markets globally were all down, India was the lone ranger or one of those rare markets when it went up. However, since September, things turned completely, ulta pulta as they say. And then, while the global markets went on to make newer highs, even Pakistan made an all time high, Singapore made an all time high, Europe made an all time high, US, of course, made continue to make an all time high, but Indian markets continue to drift downwards and downwards. So, if you just look at where it was in terms of the Nifty, so if you see the first part of the year, it went up and peaked out in September, and then it started coming down. And then the first week of March, the markets are tended to go up against consensus because in the beginning of March, people had felt that it will go down to as low as 21,000. People were all asking the retail investors to move out of the market completely. And then, lo and behold, the market took a U-turn, and then it kept on going up. So you see, market is behaving very differently than what most people are thinking, and that's what markets do. Markets try to fool maximum number of people at the critical points. At this point of time in March, when everything looked very bad, the markets went up. And now, why were the markets looking bad? The markets were looking bad simply because you see the general understanding of people was that the money is moving outside India, especially the FII money, towards US, Europe, and China. And the rationale given was that Indian 10-year yields are high, Indian rupee is failing, and the dollar index is strong, and oil prices are on the up end. So these were the four or five reasons why they felt that FIIs have gone out and they won't come back. There were also domestic compulsions, which was government was not spending enough. One never knew what the budget will do, and the corporate results were not that great. So these were some of the primary reasons as to why the markets were supposed to be falling lower and lower. Now, please note in this period, the domestic investors held on very well, SIPs continued, and retail investors put it in direct investing also a good amount. Whereas the fund managers were very panicky, and some of the funds had 25% in cash. Some of the PMS had as high as 80 to 100%, and they were all looking towards 20,000 to 21,000 before they could come to buy. And the market, as of now, has not allowed them, given them an opportunity. Now, if you look at what happened yesterday on Friday and today especially, if you look at what's happened on in the case of Japan, for instance, which is where the panic has started today, the market has fallen about 1,500 points. That is about 4%. If you look at Hang Seng also has fallen about 300 points, which is about 1% and odd. So, and then if you look at the Chinese market also has fallen about close to about 15 points there. Then, if you look at what's happening in uh, the European markets, DAX is down by about 330 points as we speak. It had gone down more than 450 points. The French market is down around that's down around 125 points, and UK market is down by about 56 points. So, if you hear the commentary today being a holiday because of Ramzan, and I wish all my brothers and sisters a very, very happy Eid and I hope they've had a very peaceful day, and hopefully they'll do continue to do well this year. Apart from the our Ugadi, a happy Ugadi, and to all our friends in Karnataka as well as in Andhra Pradesh, and Gudi Padwa, which is celebrated in Maharashtra. We wish all of them a very happy New Year. So coming back to the market, so if you see today, Asian markets are down very badly. European markets are down very badly. On Friday, we had the US markets down very badly. So we had on Friday, for instance, we had about 700-point drop on the Dow Jones, and on Nasdaq we had another what was that? That was about 500, close to 500 points down. And on S&P we had another I think more than 100 points, yeah, 112 points down on Friday. And it's a follow up today with the Dow Jones about was down about nearly 200. Now it's about 29. We still don't know how it will close. If you, as I said, if you hear the commentary, most people think that tomorrow there will be a crash because on second, that is day after tomorrow, will be what Trump calls the Liberation Day. Trump's tariffs will hit across the board, so there will be a lot of chaos. Now, I have been bullish all through. I have always believed that the markets have already discounted whatever bad is to come. There is a US delegation sitting in India. They have moved out, but I don't, and I think there will be some compromise. I think things will not be as bad as expected. So I continue to be bullish. Now, whether you are to be bullish, bearish, or whether you are to be fearful, that is for you to decide. But I will tell you why I am bullish. Okay. Now let's take the first thing is the Indian 10-year yield. We talked first of the Nifty and Sensex. Now Nifty, for instance, has gone up significantly from 21,800 to 23,800, which is which is almost where it was in February, soon after budget. If you take Bank Nifty has actually crossed over. This was where it was in February after budget. Now it has come here. So Bank Nifty has moved away from the February highs after the budget. Nifty went up close to that and has come down. Now let's keep that aside and let's look at the other issues. Now let's take the Indian 10-year yield. So you see Indian 10-year yield now is trading at a 52-week high. In fact, it is trading at a multi-year high. It's a 4-year low. Sorry, not high, 4-year low. It is trading. So Indian 10-year yield, that means the cost of money is becoming cheaper as far as India is concerned. So that is one overhang which is gone. Then let's look at the US 10-year yield. US 10-year yield peaked out sometime in January around Pongal, and they said it will go to 5 and it will go to 6. And the reason why people are moving into US is because the differential between US 10-year yield and the Indian 10-year yield. Now, if you look at it, US 10-year yield has come down, crashing in March, and it tried to go up, and now it is again coming to around 4.2. So I've long held the belief that US 10-year yield will go below 4, should look at 3.6, because that is what the US Treasury Secretary wants. He wants it somewhere close to 3.5. So if he's going to look for 3.5, and believe me, when the authorities decide a particular direction and a number, sooner or later it will go there. However much we may think it will look foolish, but it will go there. Now let's look at a wonderful pattern which has formed. A very significant head and shoulder pattern has formed in the US 10-year yield, which nobody seems to have noticed. So if you take 4.11 as the low and 4.81 as the high, that is 70 basis points. So if you take 70 basis point from 4.11, then you should get somewhere close to 3.4. So 3.4 should be the target for this head and shoulder. This is what I think. Anyway, if you whether it goes to 3.4 or not, look at the direction. The direction is down, which means that there is no longer a great differential. Then you look at the rupee. Now rupee, again, there was a lot of panic and it peaked out somewhere in January. Sorry, it was in February, is it? Yeah, somewhere around that time. 10th February, it peaked out at 88. People said it will go to 90 and 92. It didn't happen, and now it is trading at a calendar low. It is trading at calendar low. From January 1st, it had gone up from 85.4 to 88.04. Now from there it's all come all the way. So every day in the DXY, for instance, again, if you look at DXY had gone to 110, and people said it'll go to 115, and then it is steadily coming down. Now it is 104.3. Now, again, the Trump administration wants the dollar to weaken, but they're not saying it so. Then let's look at oil, which was another bugbear. Oil was about 82 just about a few, weeks ago. That was end January, and it fell all the way to 68. My target is 65 at a minimum. Trump's target, if you take into consideration of the NYMEX, then equivalent Brent should be around 55. So right now it is 74, and it is rising, no doubt, because of the Venezuela issue and all that. But it is not it's not threatening that it will go back to 100, which most people were thinking. So if you look at, and then you look at what RBI has done. If you look at, RBI has reduced interest rates, and next week, in the next 10 days, I expect them to reduce interest rates because the inflation has come down, IIP has gone up. Then look at SEBI. SEBI is trying to clear up all the cobwebs and make life easier for the people in the market. So SEBI is proactively helping out the markets. RBI is proactively helping the economy. The budget has been steady and growth oriented and consumer oriented, consumption oriented. Now, RBI, when it reduces interest rates further, I expect a 50 basis points. Even if they do it 25 basis points, I think a lot of money will come into the economy, and that should augur well for us to look forward to a brighter 25-26. I've been consistently bullish. I've seen what big fin influencers, they have been flip flopping between bullish, bearish, bearish, bullish. I don't see any reason. If you look at these, let's say, workings, and if you look at these numbers in various places which I've just shown, there is no reason for us to be actually bearish. However much we may feel about the Trump's tariffs, I think the market has discounted. There could be a couple of days, volatility, because you can never time the market perfectly, saying that everybody will think rationally. If everybody thought rationally, then you can never make money in the market. So you will probably some irrational fear for the next few days. I've been mentioning that by April 15th, all this will settle down. I'm still confident. I do not see anything which will change my mind. All the parameters which I am checking out are looking very, very good. So in that connection, I have no reason to change my opinion. I continue to be strongly bullish. We continue to buy stocks on declines. We continue to buy silver and gold on declines, and we want to be fully invested as far as our market is concerned. I believe 25, 26 will be at least good, at least in the first half, like what it was in 24, 25. And if things continue to get better, then maybe the entire year may be good. But at least for the next 4 or 5 months, I'm expecting things to be better. So all in all, I'm expecting a bullish financial year beginning tomorrow. So opening could be slightly confusing, but I'm holding tight. Whatever you do, I hope it is successful. Please note, I'm not a SEBI registered advisor. Thank you for joining me. Have a good weekend and a great trading week next week. I'll see you tomorrow morning. Thank you.